Continue a conversation that you and I have now had, Willie, for years, actually. We started sort of during the heart of the pandemic. Kept talking to you about return to office. We'll get to that. But, you know, coming off sort of these concerns about banks and what they're willing to lend to, if at all, when it comes to commercial real estate, what are you seeing and what are your expectations in terms of this tightening that we all talk about?
So I was at the Morgan Stanley Financial Services and Commercial Real Estate Conference yesterday, David, and I had an investor come in and says, I'm completely confused. I hear that banks have pulled back, yet I hear that banks are making loans. I hear that there's private capital being formed, but that private capital hasn't come into the market. And he said, tell me what's going on. I said, it's all going on right now. It's all going on in the sense that, yes, banks have pulled back, but there are still banks lending on commercial real estate. The other thing that they are doing is they are working to make sure that they don't have defaults in their portfolio. So they are working with borrowers to make sure that if they have an office building, they're not going to default because, quite honestly, the bank doesn't want the building.
Right. And that's going to continue for what period of time?
That's the thing. Everyone, like last time I was on and you and I were talking about this, there was this sense that there was this big cliff coming up, that everything was just going to fall off the edge of the cliff. Commercial real estate is it's a slow burn. These things happen over time. You look at the defaults out of the Great Financial Crisis. The Great Financial Crisis hits in 2008. Most of those loans were resolved in 11 and 12. And so these things take time to go to special servicing, to go back to the borrowers and be worked out. So it's not like all of a sudden this is going to hit bank earnings in Q3 2023. But one of the other things to keep in mind is that this is truly an earnings issue and not a solvency issue. There's been a lot of talk about, is this commercial real estate overhang going to take down another bank? There may be reasons that other banks go down, but it's not going to be specifically to commercial real estate exposure.
We talk a lot about commercial real estate in our conversation, but I'd love to come to multifamily. We can get back to return to office in a minute, because you guys do a lot of business in multifamily, which has been, well, how would you characterize it right now, and how much is it weakening? You know, we heard from Stuart Miller earlier on single family.
So of all commercial real estate, industrial has held up the best. If you look at the publicly traded industrial companies, they're trading at a slight discount to net asset values today. And then the next best is multifamily. And then you've got all the others, retail, office, and hospitality, well below that. And multi has done very well, but you've seen rents come down. As Stuart just said, rents have basically flattened where they were rising at 8, 12, 15% in some markets. And so the thing to keep in mind there is that housing is such an important component of the consumer price index. It's 40% of the CPI. The Fed's really focused on the CPI, and that's a lagging indicator. They're still looking at rent growth, whereas rents have basically flattened. The issue is going to be that there's a lot of supply in the multifamily space coming online in 2023, but what you're not getting today is new shovels in the ground. So I mentioned to you the other day that a very large developer here in New York, for the first time in their 55-year history, does not have a construction project underway. What that's going to lead to is undersupply in 2 to 3 years, which is going to once again cause an issue for rents to start moving.
Which is inflationary and
exactly,
a problem.
Sarah.
So I just back to office for a minute, because I saw this headline. One of the companies I follow is Fifth Third Bank yesterday at that Morgan Stanley conference, where the CEO said they are currently not pursuing any new office CRE originations.
Yeah.
Is there a credit crunch or not in real estate?
Well, so they're not pursuing new loans. So they're not going to go out and make a new loan on a new building. But I can guarantee you they're working with the existing inventory to make sure that those borrowers can either extend the loans or get a new loan in place. And so I think what they're trying to do is avoid any problems. They just don't want the keys. Because if you're a lender and you get the keys back on an office building today, as you're accurately saying, there's no market to go sell it into. There's no bid on that property.
But this is going to take years to work through. I mean, just in this area alone, in Manhattan, just the conversions, dealing with this huge lack of occupancy. And we're actually better than a lot of other markets.
Better than a lot of other markets. And as you know, David, around office buildings is a whole ecosystem of restaurants and of pharmacies and of taxi cabs that would take people to their offices, to government payroll, to government tax revenues that would come in. There's a big long-term issue here as it relates to, a lot of people sit there and say, oh, the only people hurt by not going back to the office are the landlords of the building and the lenders to the building. Wrong.
No way.
There are ecosystems all around it, including tax revenues to local municipalities, that if they don't get those tax revenues, they can't invest in police, they can't invest in fire to keep these cities safe.
Is the worst behind us for the office market?
No,
you don't believe so? Because we had, I think, the CEO of JLL was on with us not long ago saying, you don't think so?
I think the world of Christian, but I do not think that the worst of office is behind us. just because we haven't seen any real rebound in office occupancy, which means that CEOs like myself aren't out there sitting saying we need new space. You've seen the tech sector do massive layoffs and bring down their office usage levels. And so I think it's going to be a while longer. But
Does it ever come back?
I do think it comes back, Sarah. There are going to be real winners here. There are going to be real winners here.
Who's the winner?
Oh, the winner is the Class A office building. I mean, Boston Properties, Owen Thomas, they own Class A office buildings. They are where people want to be today. They don't want to be in B and C class office buildings where, those are really challenged assets right now.